Today, we're going over the state of Utah's market, part 2. We'll conclude our findings of what we want to share with you from the Kempsey Gardner Policy Institute at the University of Utah. I've got my notes here. I'm going to be reading a lot from them because I want to make sure that I'm delivering you guys value in this conversation. So make sure you stay tuned. You're going to want to hear all of this. In this video, we're going to be talking a lot about Utah and the potential for a housing bubble. If you missed the first part of the video that had some key takeaways, make sure that you watch that video as well. Today, we're going to be focused on, does Utah have a housing bubble? That's going to be our main topic of discussion today. So before we dive into that though, to give you a little bit of a historical perspective and an outlook on where we've been, we're going to share that with you first before we look at where we're going. Home prices in Utah have had rapid acceleration increases in the past. This isn't new. In 1994, the state led the country with an 18.3% increase in prices. And again, in 2006, we led the country with a 17.2% increase in prices. Now, these nation-leading price spikes pale in comparison to 2021. In the second quarter, we saw an increase of 28.3% year over year. However, in 2021, Utah didn't lead the country, but we did rank second only to Idaho. Idaho had a crazy increase of 37.3%. So keep in mind, it could always be worse, right? As the map shows here, the most rapid increase in housing prices are in the western states. Of the 11 western states, 8 have price increases of more than 20% in the past year. And the quarterly Utah data from the Federal Housing Finance Agency's Housing Price Index illustrates a strong pattern of price acceleration, culminating in a price spike followed by price deceleration. So the historical data is showing that Utah's current price cycle is distinguished by its length and magnitude of the price increase that we saw in 2021. So now let's dive into what was happening after price acceleration. You know, we're talking post-Great Recession. Since 2000, the median sales price in Utah for homes and condos has averaged over 5% growth annually. That's usually what we're seeing is single-digit growth. That's healthy growth. That's stable growth. At this rate, the price of the typical home doubles every 13 years. So even when adjusted for inflation, housing prices in Utah have averaged increases of over 3% annually. These long-term growth rates include the 15 consecutive quarters of price declines from the second quarter of 2008 to the fourth quarter of 2011. Once the economic recovery took hold, price increases accelerated from 2011 to 2021, the last 10 years, averaging nearly 10% annually. This has culminated in the second quarter again of 2021 with the unexpected and unprecedented 29% surge in prices despite a global pandemic and recession happening. Now, this isn't localized in just certain parts of Utah. This is covered across the whole state. The record housing price increases include nearly all counties. Generally, past price upswings have been concentrated in the metropolitan areas, but over the past year, prices increased by at least 20% in 21 of Utah's 29 counties. Now, some of the smaller counties have limited numbers of transactions, so it's kind of harder to gauge those. Therefore, the percent change may not be a reliable measure of change, but in 12 counties, the change was greater than 30%. 2 counties with more than 100 sales transactions had price increases greater than 40%. That was in Sevier and Summit counties. And only 2 counties saw declines, Uinta and Wayne County, which both those counties historically in the past have had the most volatility in the state. The 2.1% decline in Uinta reflects the county's struggling energy-based economy with the drop of oil prices in 2020. Exploration and drilling activity fell a ton. So again, that's kind of why we saw those declines in those. In Summit County, we saw the median sales price increase by nearly $350,000, totaling to $1.15 million. Neighboring county, Wasatch County, had a median sales price of nearly $758,000, the second highest price housing market. Now keep in mind the data includes all types of housing, single family, condos, townhouse, and twin homes. We also saw large cities see substantial price increases. So of Utah's 15 cities that have more than 50,000 people, 11 experienced price increases greater than 30%. Certainly for most, if not all of these cities, the gains were record breaking. Like I said, this last year was just a crazy year for housing and for the pandemic. 30% price increases were unheard of in Utah before 2020 and 2021. Layton, Utah led all major cities with an increase of 41.7% in 1 year. Wrap your mind around that. 41.7% in 1 year, followed by Harriman at 38.1%. 9 other major cities saw increases of more than 30%. Interestingly, Harriman was the only city in Salt Lake County to rank in the top half of the 15 large cities. Lehigh, Logan, St. George, Ogden, Provo, and Orem registered larger increases than most major cities in Salt Lake County. We also saw double-digit price increases for new homes in the state. While the median sales price of new homes is up 13% in the greater Salt Lake market area, this increase is well below the price run-up prior to the Great Recession. So from 2005 to 2007, the median sales price of a new single-family home in Salt Lake County jumped from $240,000 to $430,000, a clearly unsustainable 80% increase. With the onset of the Great Recession, the housing bubble burst as the median sales price fell to $352,000. So we went from $240 to $430 and then back down to $350 and did not regain the 2007 price level for 11 more years. It took 11 more years to get back up. The 2005 to 2007 housing bubble proved disastrous for single-family home building, and much more so than for the existing residential real estate market. But in the last few years, single-family home building has rallied. It's made a comeback. The number of permits issued for single-family homes will likely exceed 20,000 units in 2021, a level topped only by the all-time record of 20,950 units in 2006. So we're just barely behind that. As demand's picked up, the price of a new home's increased. Year over year, second quarter data shows that the median price of a new home in Salt Lake County is up 16.7%. In Utah County, it's up 15.9%. Now, we know that there's an increase in land costs, labor costs, material costs, plus the rising demand. All of the recent price hikes for new homes are modest compared with the recent price increases for existing homes. The median price of a new single-family home is now below the median sales price of an existing home in the Salt Lake and Utah County area. And we didn't just see that, in housing. We saw that in lots of things. Cars were a good example. I noticed it personally this last year when we got a side-by-side. It's just kind of crazy. In Salt Lake County, the typical new home sells for $507 compared with $535 for an existing home. While in Utah County, the typical new home sells for $461 compared with $509 for an existing home. Now, this price difference is likely explained by the premium paid for location, right? Existing homes are generally closer to employment, closer to cultural wants and commercial opportunities, thereby commanding a higher price. Now, let's talk about housing prices and the impact that they have on household wealth and debt. The wealth of Utah's homeowners grew by as much as $70 billion over the past year. Utah has 700,000 homeowners. Assuming an average home value of $400,000, which would be a conservative estimate in my opinion, the total value of owner-occupied units would be $280 billion. A 25% price increase in housing values yields a homeowner equity gain of $70 billion. Wrapping that up for you, if you owned a home, you got a ton of money now. You got a ton of equity. And if you want to figure out what you can do with that equity, how you can take that equity out, give us a call. We'll help walk you through that. So let's talk lastly about what does Utah's housing past tell us about housing bubbles. Housing price acceleration and deceleration or decline define price cycles. So Utah is now in the fourth price cycle since the 1970s, and these price cycles consist of the following. So the first cycle was from 76 to 1990, cycle 2, 91 to 03, cycle 3, 04 to 2011, and then lastly from 2012 to the present makes up cycle 4. The two recent cycles stand out as remarkable, but in different ways. First, the third cycle that included the period of declining housing prices from 2008 to 2011. And second, the subsequent cycle's prolonged period of acceleration, which is now in its 9th year. In the aftermath of the Great Recession, housing prices fell by 15.6%. This is the only instance in the past 75 years of housing history when price declines lasted more than a few consecutive quarters. There were 2 single-year declines during the 50s, a single-year decline in the 60s, and a few consecutive quarters in 83 and 87. But the rare occurrence of falling prices over an extended period like we saw in 2008 to 2011, the bursting of Utah's only housing bubble. set the stage for a long period of price acceleration. The first few years of the current acceleration were a recouping of falling prices during the Great Recession and its aftermath. So now the question is have those 9 years of rapid price acceleration created the potential for another housing bubble? Utah's housing past, at least back to World War II, confirms that the market has experienced only one housing bubble, despite nation-leading price spikes in 94 and 06. Every period of price decline, whether brief or prolonged, from the 50s to 2008, 2011, has been associated with a weak or contracting labor market. From the historical data, it appears that a housing bubble with extended price decline must be associated with a substantial loss in jobs. For Utah to experience a housing bubble in the near term, it would require a loss of jobs, which is an unlikely prospect in the next few years. For those of you who have tried to hire, it's crazy right now how hard it is to find help. Seeing that our unemployment rate is near 2%, you can see that anybody who wants a job can have a job right now. So we just do not see a loss of jobs in the next few years. Furthermore, Utah's only housing bubble occurred during the first U.S. financial crisis since the Great Depression. Financial crises are much rarer, more serious, and destructive than recessions. The 2008 financial crisis was precipitated in large part by loosened banking regulations, reckless lending practices such as subprime loans, and risky financial innovations. If you want to know more about that, check out the show The Big Short. There is a little bit of language of that, a little forewarning, but if you want to learn more about that, The Big Short explains it very well. To wrap this all up, to sum this all up, what we want to share with you guys and tell you is that the most likely outcome for housing prices in Utah over the next 2 to 3 years is the beginning of a period of price moderation, still increasing, but moderation. A period of extended price declines creating by a bursting bubble is extremely unlikely. The conditions just aren't there to cause a bubble and to cause a bubble to burst. So if you're thinking about buying a home, you can still get it in and have some equity being built while we ride this wave of increasing prices.